Hi traders, welcome back to the channel. So today I want to introduce you to two of my friends that I bring to the trading desk pretty much every day, particularly when I'm scalping. I'm not really a big indicator guy, stochastics, and I don't know. I just don't really understand them. And quite honestly, I'm just being data driven because a lot of the people that I know use them, I don't know, I just don't see the success coming out of them. Maybe, there's outliers. I'm sure there is. But I'd rather look at these two tools that quite honestly are not really getting the love that they deserve. Let's take a deep dive and show you how I use them. All right, so we'll take a deep dive into these two tools that I use, really that I call under the hood, which my mentor always preached, that there's sort of that radar screen, sort of periscope that allows me to really hone in, particularly when it comes to entry and exit. And again, this may be new to you, so don't worry about that. I'll provide all the rules. Click on the link below and I have all the criteria that I use to help me zone in on where I'm going to enter, where I'm going to exit, and quite honestly, help me with my bias. And the first one that we're going to look at is the New York Stock Exchange tick chart. Okay, so different platforms may call it different things. I've seen it called the tick chart, New York Stock Exchange or NYSE tick. I'm using TradeStation in the US and it's referenced as $TICK, right? But basically what it does, it kind of acts like a pressure cooker. It really just plots the net difference in all the New York Stock Exchange, or I think the top 1,000 stocks in the New York Stock Exchange, anytime one of those stocks goes up a tick, a penny, it just plots one number higher. And every time it goes down a penny, it goes down by, an equivalent of one, right? That's all it's really doing. It's just sort of like a fine-tuned magnifying glass gauge. And you have all 1,000 stocks doing this, going up a tick, going down a tick. And this basically just oscillates back and forth. Now, it sounds like information that we really may not need. But when you put all those together, it creates a sort of summary number. And it really gives you a glimpse of what the market is doing in relation to market context. Let me explain. Okay, so here I'm just plotting a 5-minute bar chart, all right, starting at the open. And I'm putting reference points of a plus 400 and a minus 400 signified by those red lines, right? Inside there is the sandbox. That's going to be a big factor in determining what my trading style is going to be for that day. If it starts opening up and coasting in balance back and forth, I'm probably going to be opting more towards scalping. If we have a balanced day or an inside day, particularly if price is inside the prior day's session, right? It's just the market just digesting price at that point. So I'm going to become more of a scalper. Now the question is, where am I going to enter? Well, in scalping, I'm not a big fan of waiting for a candle to close and waiting for the engulfing candle and the candle and the candle and the confirmation of the candle. It's too late for scalping, right? I need to get a really good price. Entry is key. So what I'm going to do, if it's going to remain in a balanced state, and we all don't know that, right? I want to see when price goes to that negative 400 and sometimes even on a wider day, minus 600. Now here's the key to my scalping arsenal, right? I'm not waiting for confirmation. That is my confirmation. If we're in a balanced state and price, or at least a tick chart, is oscillating between minus 400, plus 400, even a minus 600, something like that, that's my sweet spot. So I'm going to make an assumption that price is going to remain in balance. Will it? Don't know. We're going to find out though once we enter. And the whole idea is I'm going to take that trade and exit when it goes cross country to the plus 400 or minus 400 if, I'm short. Okay. It's as simple as that. In a sense, I really don't even need the candlestick charts because really under the hood is telling me more than any candlesticks can. Right. Now, there are other factors I want to consider. Right. Where are we in relation to VWAP? Are we an inside day versus outside day? Balance, remember, leads to imbalance. All right. So I want to see also the reaction of how the tick charts respond at those levels. If it's going and oscillating between plus 400 and minus 400, or maybe it dips down to a minus 500 and snaps right back, that's key for me. All right. I'm in a scalper's market. I'm going to take advantage of it. But again, I'm going to confirm that with other oscillators such as things like VWAP and stuff. Where am I in the big picture? But the New York Stock Exchange tick is kind of like, let me see if I can explain this. It's like getting that periscope, that magnifying glass. Do you know a cheetah in the jungle? You ever see those? Maybe there's some B-roll coming up here. They get a cheetah in the jungle and he's watching all the wildebeest pass by. And they're like, oh my God, they're like right there. You should just grab them. But you're just waiting. right? And then boom, he just goes and attacks and gets that kill, right? One shot, one kill. Kind of like the SIG chart. There's a lot of opportunities maybe to go long, right? But I want to see if I can get a little more meat off the bone, so to speak. All right. And that's what the tick chart does. In these chop markets, I'm going to be playing this game. I don't know if you have those in where you live, this in the arcades or the boardwalks, where you have those things called whack-a-mole, where the little mole pops his head up and you have the hammer and you whack him on the head. You whack him on the head. Well, that's what these minus 400s, and plus 400s, even minus 600 and plus 600 on a little more volatile day, right? That's what I'm doing. Just playing whack-a-mole. And S&P futures, 3 or 4 points here and there, they add up. I mean, you can make a career off of that. So playing those are pretty interesting. When it goes outside of balance, though, and not just by one bar, when it starts going outside of balance and staying there, like in a case over here, now I'm really more interested in shorting. How come the tick chart didn't make its way, didn't have enough strength to get to the plus 400, which, by the way, is a sort of my short sweet spot, all right? Shows me internal strength is really weak, and I really want to be focusing on the short side. Again, given everything else is lined up, all right? I'm not just trading a tick chart per se, but that's sort of the internal, under the hood vibe that I'm getting, saying these longs can't push it. Even short covering can't even push it to 400. In a case like this, where we had some really, really deep minus 1,000 readings, all right? That's sort of short only. So I've already filtered my longs out of there. Again, everything else equal. But I'm also going to be looking at, where am I in relation to, say, VWAP, for example? All right. I love trading against VWAP. If those two lines up, I'm definitely in that trade, even if it's just for a short scalp. All right. So take advantage. Where am I going to trade it to? Probably the minus 400. All right. That'll be like sort of my first target. And if I'm scalping, just grabbing crumbs in a balanced market, I'm just going to trade that plus 400, minus 400, plus 400, minus 400. And if I short a plus 400 and it starts staying up there too long, I could just bail at break even. All right. That's the beautiful thing. I love this sort of cheetah look, one shot, one kill look in getting my entry because, as you know, scalpers, make the comments down below. Let me know what you think. Every tick is so precious, right? And if you start chasing, you kind of kill half your profits and put your sort of trade at risk because you have to move your stop farther away and all that kind of stuff. So it's not worth it. When I'm on a plane or I'm having dinner or something, I don't even have the charts up. I have the tick chart. That's my number one chart that I'm looking for because if I know what I have to do, if I know where my bias is, I'm just going to be looking for areas to take advantage of that. And the tick chart is sort of like that magnifying glass to make sure I get the best entry possible. All right, my next friend in the arsenal, and they work hand in hand together with the New York Stock Exchange tick chart, and that is the advanced declines, the net advanced declines on the New York Stock Exchange. You may see them referred to as ADD, or in TradeStation, $ADD, the net difference of advancers on the New York Stock Exchange versus the decliners. It's really important because it gives me a sense of market breadth. So if you open the trading day on the New York Stock Exchange with a minus 1,700 reading or a minus 2,000 reading, chances are the futures are down. Everything's pretty much just, sell, sell, sell. That doesn't mean there is an entry right there. It just means that the pressure is really, really, really short. And anything under 1,700, quick hack, I'm pretty much going to be short and maintaining shorts the whole day. So a popular question I get is, hey, Mike, do you trail or do you take stiff targets? My answer is always the same thing. Depends. I'm going to look at my tick chart, but I'm really going to look at my advanced decliners. If they're really in the red, like minus 1,700 and above, minus 2,000 and staying there, I'm just shorting. I'm whack-a-moling every time the tick chart goes to a positive number. See how they both work hand in hand? It's been really successful in me and really has helped me improve my scalping, not just win-loss, but my overall profit factor and the amount of ticks and points I get off the S&P 500 and the S futures, for example. So in a case like this, advancers opened up around 600, rallied up to 800, and then failed. It doesn't really mean that much. In fact, we're getting into sort of this neutral territory where advanced decliners, plus 600, minus 600 is about neutral. So if the advanced decline is in a sort of neutral state, that sort of plus 600, minus 600, right? And the ticks are in that minus 400, plus 400, all right? It's basically reconfirming under the hood. The internals are saying balanced market, all right? So what am I going to do? I'm going to focus more on my scalping strategies. I may be selling 0 DTE, all right? Something like that, maybe with one day. Just sort of grab that premium, right? things like that. I'm not going to be trailing. I'm probably going to be taking stiff targets. All right. So this is sort of where you have to sort of mix and match what strategies are best applicable to the different kinds of markets. So now we have an example here where this is the zero line. So a price came all the way down to zero. Notice how it bounced here? Talk about a quirky nuance. I mean, a lot of traders, this is a pretty good opportunity just to scalp, just to trade off the zero for the bounce. All right. Now we have, remember, it started at plus 800. Now it's starting to go negative. It went negative, bounce back to positive, and now we're going negative again. All right. So now my bias is going to be changing. I still may be thinking scalp, but I'm probably leaning a little bit more towards short. I'm going to be thinking, the first thing I'm going to be reaching out for, where am I in relation to VWAP? If price is coming down and it's going to be hitting my VWAP as support, I'm probably going to pass on it. All right. I'll wait for VWAP maybe to break or things like that, or I'll keep it lighter. All right. Take advantage of this. Where would my stop be? We all put the stop above a candlestick or a certain price. How about putting your stop when the advanced decline goes back to positive? This is a big key separation between, I think, most retail traders, where you're looking at price. Price is just an advertising mechanism. Here, we're looking at the internals. We're looking at the engine. We're looking under the hood, and we're doing it with a magnifying glass, like that leopard or cheetah trying to grab that, disabled wildebeest. All right. That's what we're trying to do. And as advancers keep going down, now you have sort of confirmation that this may be getting outside of a balanced state. Now what am I going to do? Well, I may just be shorting or maybe starting to switch my mindset when it comes to trailing versus no trail. Where would I short? I'm going to go back to the tick chart and wait for that pop to the plus 400. Why? Whack-a-mole, whack-a-mole. And then you have a really good entry, at least at the time, and you can make that assessment. All right. Can I put my stop above VWAP? All right. Or do I have confirmation I'm going to let this thing go? Where was the prior day's low? Did we breach it? Or maybe we're just going to retest it. Maybe that's where I'll put my target. All right. So using these internals are pretty cool. The advanced decline, net advanced decline, and the dollar tick, New York Stock Exchange tick chart. All right. Click on the link below. I'll give you the full details of what each one represents and a little high level view of how I look at them and what role they play in my arsenal. All right. I hope this helps. I know we're very accustomed to sort of the off the shelf indicators, but part of my job here for the YouTube community is sort of open your mind a little bit. Maybe you like it. Maybe you're not going to use it. Maybe your platform doesn't have it. What am I going to do? Maybe I should think about getting it. Or maybe ask my broker, hey, can you get this? Also, put in the comments below. Let me know what tools you use. Maybe there's ones that I'm missing that I need to take a little closer look at. All right. Hope you enjoyed this one, and we'll see you next time.